Dickey here, and I want to give an update on CPI and give you my comments on the overall CPI and where I think it's going and where I think it's going to affect the economy and what's going on with the Fed down the road. So let's listen to what these guys have to say.
At the American Enterprise Institute, what'd you say? I'm sorry? Emily Gee, Senior Vice President for Inclusive Growth at the Center for American Progress, and our own Senior Economics reporter, Steve Leisman. Steve, we'll go to you first. It's weird, isn't it? Everything, economists did a pretty good job of forecasting, but it still doesn't cause it a little agita.
Yeah, look, I see good news in this, Joe, and people can throw things at me if they like.
And I'm going to stop it here real quick because I actually see a lot of good in here, and I really didn't expect to see good in this report, especially when it came in at 3.7 versus 3.6 expected.
But the thing that stands out to me, I just want to double check this. Owner's equivalent rent came down again, just double checking that. Just want to get the number right. But we were at, I think 0.4 is the number we have. So that's a help. And when I look outside of the energy complex, Joe, it looks like prices.
And this is the one I want to get at. And he's going to talk about it in a little bit, but I want to focus on this part. And the reason this is important, as most of you, and I'll get to this on my other screens here in a second, oil has been the part of this that I thought would push CPI down the quickest because of the year-over-year numbers until we get to this month. And the reason for that is, and again, we'll show this in a second, is that once we get to these, between now and the end of the year, we're not going to get any more help with oil on a year-over-year basis going down. But what I'm seeing in the underlying numbers is that everything is either leveled off or continuing to decline. So even though oil is going up, the rest of it is continuing to come down. Now, what reason that's important is it depends on how much of a pass-through there needs to be, or there will be, on the oil increase throughout the whole economy and the whole ecosystem. Because again, you have people putting oil into the system at every stage, from the farmer to the person driving it from the farm to the wholesaler to the retailer. Oil is inclusive of everything. So the question is, how much does the increase in oil that we have get passed on? Now, I'm hoping, and because the numbers have not come down from when we were here last in oil, that they just never reduced them. So the numbers should already be in the prices that they're charging. So the company shouldn't have to increase prices. There should already be in there. And most companies will do that. But that's going to be one of the questions. But in general, like he says, what I'm finding is that the numbers from the energy are really the bigger problem. But again, they fluctuate, and that's why they take them out of core. But the rest of it seems to continue to go in the right direction.
And by that, you did have a pop in airline fares and motor vehicle insurance, which raised transportation services 2%, but medical care services up 0.1%. Some of the other elements in here, used cars fell again 1.2 percentage points. So Rick can go out and get himself another jalopy if he likes. And food at home was pretty well contained at 0.2%. Food away from home, 0.3%. So we're not as yet, and this is why you got to be careful here, seeing a bleed from higher energy services into other prices immediately. There may be other issues down the road. There could be some pop-up in inflation expectations to worry about. But for the moment, the surge we got here is in energy services, and the question becomes whether the Fed finds comfort in the core, which has been coming down. It is a little hotter than expected, as Rick said, but the year-over-year rate has been coming down.
Emily, we just had Sean Fain on. We've been talking.
Okay, and we're going to stop it here, and I want to go to my own analysis on this because he's basically saying the same thing that I am here. The question is, how much is this passed through to the end consumer? Which again, I'm hoping that most corporations, when we had oil back here 18 months ago at the same levels that we're at now, and I didn't see a decline in the prices of cereal and other things, even though oil went down, they shouldn't have to push this oil price through. They should have kept that level and it should have stayed there. Now, again, that's my assumption. Now, it may not happen that way. But what I want to focus on here, and those of you who've seen my other videos, The focus I've got mainly is on shelter. But this month we're down to 7.3. And again, the reason I focus on shelter is that it's 39% of CPI. You're not getting CPI or core CPI or anything related to CPI under 2% or towards 2% until you get shelter down. If shelter is at 7.3% and it's 39% of CPI, it's not coming down. But what I am happy about is that if you look at shelter, it's gone from 0.8 to 0.6 to 0.4. Now there was a little blip here, but we're at 0.4, 0.4, 0.3, which means that over the next 12 months, if this can continue or even stay flat, we can get to where we need to go with shelter, which is, again, as you've listened to my other videos, that's exactly what I've been saying has to be done, because we're not going to get any more help from oil in this process. We're not going to get any help from any of the other sections because, again, oil is going to bleed a little bit over to those items. When I look at oil, and this is what I was talking about earlier, we were still down year over year, $4 to basically $3.95. Not much, but not up. But I'm telling you, our comp from next month is 3.8, then it's 3.9, then 3.8 again. We're probably not going to be below these numbers. Oil's probably going to be higher. But again, the question is, does shelter come down with this? So when we look at the rest of these numbers, lumber is still helpful. It's not hurting us. Soybeans, not hurting us yet. Steel, really not hurting us here. Copper, year over year, again, not hurting us. It's not in a great shape. So none of this stuff is really being harmful at the moment. Wheat's actually very helpful. The only one that's not is oil, which we've already talked about that. So the other inputs are still helping, and they're not hurting yet. So we haven't seen, as I've talked about, we haven't seen the oil increase bleed over into these other inputs and having them spike like they did back when the initial uptick back after Ukraine. So that gives me a lot of positivity going into this, that when you look at what Powell's going to look at, which is going to be core, which went from 4.7 to 4.3. That's a pretty significant decline. Now, we all know that Powell is not going to be increasing rates next week. That's not an issue. But we're also seeing a lot of other cracks. So the inflation is helping us in this regard because it's showing us where the problems really are, and it's a problem that we've known for a long time, and it will correct itself because there is a lag in it, and that's shelter. If all the other parts can hold together and can not get bled over from the oil going up and not harm and again push everything and make it an issue, and raising interest rates, raising rates because it's bleeding through on the different levels, and you start seeing all of these inputs go up, and then your core products continue to go up, shelter can't overcome that. But if we can keep them where they're at and keep them steady, shelter will continue to come down, and as shelter continues to come down, it will bring the numbers in line. That's just what I see. Now, I might be looking at this incorrectly, but we'll have a better idea next week because we'll probably hear a little bit of that from Powell. But I'm actually far more excited about this report and confident in this report and what it's showing going forward than I was going into it. I was a little bit concerned because I hadn't seen a significant decline. I was concerned about core going up last month. Now we got a decent decline. Again, a 4 percentage point decline in the core is, again, that's a healthy decline. So if that will continue, shelter holds up 6, 8, 9, 12 months ago, we actually there's a chance that we're going to get back down into the twos without the Fed having to make major changes down the road. And again, that's the really bigger concern right now, is not whether or not Powell has to keep rates where they're at. Again, I hate that word, higher for longer. Forget the higher for longer part. What you have to focus on is Powell going to have to raise? Because if he has to stay where we're at, we're fine. We can live with this. We can focus on this. The businesses can handle this. The businesses can go beyond this. What they cannot deal with is if he says what we've got is not restrictive enough and he may have to go higher, because then they're just going to go, okay, was it 1%, is it 2%, or are we just having a whole other issue that we cannot put into numbers and we can't grapple with? So that's my focus on that. So I think Powell's going to be fine next week. I think he's going to say all the right things. And I think the core did what we needed to do. Now, my next question on that is, what does that do stock market wise? Now, the stock market started off today really looking at this the way I did, which was up. But now we can notice that the Dow is actually down. NASDAQ's it's holding its own. S&P's holding its own. So it's going sideways. So what I don't want you to do is freak out over this and make major assumptions on this. As I keep saying, it doesn't matter what the numbers say. It matters how the market responds to them. We're not going to know how the market's going to respond to this data for several days. So don't take what's going on today as being a main issue. The other one I want to notice or show you is down here. It's showing you that housing remains the key component to bringing down inflation. So someone else is seeing what I'm seeing, which is that as shelter continues to go down and you annualize the month over month increase, and that's continuing to go down, even though the year over year might be at 7, that's just because it's back end loaded. When you look at the increases month over month last year, they're still on there. They're still showing. But when we start coming into next year, where they're only up 0.3 and 0.4, that's really going to make the shelter come down. Now, it's a waiting game because it's just not going to go quickly, and we get that. So between now and next year, when we get to shelter being at 0.4, we just got to make sure the core stays where it's at. And that's what Powell's looking at, and that's why he looks at it that way. So that's my 2 cents worth. Don't take what's going on in the market today for anything. It means nothing. Give it a week and see how it responds over a whole week or two. That's going to give you a better picture of what's going on here. And with the Fed coming out next week, again, I don't even know if I'd look at what's going on between now and next week as being how the market's going to take this, because I think the market's going to really wait and see how Powell takes it. I wouldn't make any major changes. I wouldn't make any major decisions based upon this, but do talk to your financial advisor. Make sure your portfolio is set up so that you can retire when you want to retire and how you want to retire. And again, I actually like this report. I think it was a better report than I anticipated, so I'm excited about it. Dickey out.